What's happening, guys? Today I wanted to go over a topic that we've been talking a lot about lately. However, we've got a great example, a real-time example, and a good way to kind of see what you need to see in order to have a little bit of faith in the potential of a breakout. So, in this particular example, we're talking about looking left to anticipate where you should assume that the chart would fail, and in which case, if it does break over a particular level, at which point that is, and when it could start that outsized move. So, for example, NPTN just had a nice little breakout. And it's always easy to go back after the fact in hindsight and say, here's a good example, here's, what you should have done. But what I want to get across is actually the thought process real time. And so I have a little bit of the conversation that a member was asking me in the room just to kind of show you as it unfolded real time and the thought process that goes into the trade. So right away, when you see a move like this, you can't obviously see those right two candles that I just removed. So when you wake up and this stock is gapping towards 470s, 480s, maybe $5, all you can do is look at the prior two levels, the prior 2 days of big volume. So you've got this day over here that's got 7 million, and you've got these 2 days over here with 5 and 3 million. So there is a good chance that it's going to run into some type of resistance based on those prior tops, right? And the way in which that it would get an aggressive outlier style move, some type of move that's going to break through and actually probably run, would be a day in which it breaks through this level, comes back, retests it, holds, and then breaks out, and then starts to continue on. Most of the time, you'll see a breakout happen, and then it'll come right back under. Breakout happen, come right back under. Because there's that prior resistance, it's the overhang that it's got to chew through, and usually that takes a long time. It might take, weeks, it might take months, it might take years, or if it's got enough momentum, if it's got enough volume, it could take just that day. So this is a perfect example of, kind of the trade unfolding real time, and we'll take a look at the chat logs, like I said, but typically what I do is when it gaps up, it's got some news, whether it's earnings or a good PR or whatever it may be. It has some type of catalyst. It has abnormal volume, higher than average daily volume. That alone makes it a potential for the potential breakout of this prior resistance. But no matter what, we should assume that 515 level is probably going to be top, because this top was 515 and this top was 512. So right away, both times that it had tried to go higher, tried to get through that prior resistance, it failed on heavy volume. So the point here is, how do you trade this intraday? How can you use that to help you with a trade intraday? So the goal here is to let it kind of tell us and then start to anticipate that trade, because a lot of times we will get long a little bit prematurely. And when we do that, we can pre-exhaust ourselves. We can exhaust ourselves before the move happens. We might be right all along, right? You might get excited a little bit, and you might get long at 510, 515, and you're kind of anticipating that breakout, and it busts out, and you add. But the reality is we don't know if it's going to actually hold that prior resistance as support, or if it's just going to act as resistance again. And so if you got excited, you're excited about the earnings and the numbers, whatever it may be, and then it comes back in, you might bail because you were early and you basically pre-exhausted yourself. And now you end up missing the entire move because you got a little gun shy. So the other way is to not try to just nail it right away and try to chase that move and have the FOMO, but rather let it set up and slowly scale in accordingly. So this is about a little bit after 10 a.m. and a member had asked me if it looks like it's ABCDing. This is about 10:20 a.m. And I said it doesn't. And the reason that I said it didn't is because the only information that we had at this time was not this candle right here, but basically this. And so what I want to see when I'm anticipating a potential reversal, ABCD type move, is I want to see it curl back, higher lows, and then start to form a higher low. So yeah, we had some bottoms forming, but we haven't had any attempt to push higher and then come back and confirm a higher low. So that's exactly what I wanted to see, and I mentioned that I wanted to see basically 495 push, come back, retest, and then once it confirms, then yes, I would agree that we have a potential ABCD setup. And so what that means to me is that it's a potential start for an entry. So hypothetically, if you wanted 5 or 10,000 shares, it might be a start for me for 1,000 or 2,000 shares. Basically a quarter entry. A little bit less than a quarter or up to maybe a quarter on a starter position. And then as it starts to confirm and it holds a higher low, then I might start to scale in, but I'm not going to scale into anything beyond a half size until we actually confirm that the chart is going to break out. And how we're going to do that is exactly what we talk about next. So NPTN is the one that I would assume that 515 level fails. You should assume that the prior top fails, because if you're kind of scaling in and you're adding up too fast, so if you get in at 5 and you're chasing it, you're adding at 512, well, what happens if it stops at 515 and you just brought your average all the way up and then it pulls back to 505 and 5? You've exhausted yourself again, right? So you're going to end up getting out of the trade. So the idea is that you want to see it bust through, and it comes back to the thought that I'd always rather buy higher than have too much too soon. So as this starts to break out, you can see that once again it goes up and it busts through the 515 level, kind of consolidates a little bit, holds a higher low, starts to break out, and now it comes back, and this time it actually bases at that 515 level. So rather than peaking out, it actually comes back, retests, and it confirms. And from that point forward, it held a higher low throughout the day. And typically what I like to do is risk versus VWAP. So this is a perfect example of kind of letting it clean up the trend, letting it prove that it wants to break through that level. Let it do that. Let it get through those resistance points. And then as it comes back, let it prove to you that yes, 515 is now the base. And at that point, now you can start to risk based off of either prior support, VWAP, or whatever you feel comfortable trading based on the size that you have. So in a situation like this, had I started in like we talked about over here at about a quarter size, then I'd probably let it kind of set up. And any adds from that point forward, I'd start to use as VWAP. And then anything else, once it starts to kind of break out, in this case, you can see kind of anticipating that 550. You can see 550 starting to peak out, then it finally confirms. So at that point, that's when I start to probably scale into any more size. So this is just a perfect example, kind of unfolding real time as we talked about it in the room, of letting that left side of the chart help you with the levels that are going to matter and where the chart may actually speed up. Because the goal, obviously, is to get long or short, depending on which direction you're looking for, but to not pre-exhaust yourself in the sense that you get into the trade too early. You might be right all along, but it might need to do that one more flush out. It might need to do that one more squeeze out if you're short, right? So a lot of times we always, have that fear of missing out, but we end up exhausting ourselves on that front side of the move or before it sets up, and then we miss the move altogether. So this really helps with that. And so again, Always look left. We've talked about this before on VISL. The days that you can kind of go back and see these prior days here that actually have some pretty good volume, but when you get outsized volume and you break that prior resistance point, that's when you get your outlier style moves. So just to kind of finish this thought, you can see here, I was talking back to the member, through those 515s, you can see how they came back and they retested as support and then onward and upward. So again, this is just what I want you guys to see, and the goal is not a after the fact. This is what happened. This the goal here was for you to be able to see it kind of playing out real time, and the thought process that I go through as the trade unfolds. So I think that this will help a lot of people. If it doesn't, if you're confused, feel free to reach out, leave a comment. More than happy to help with any further questions you guys might have.